for what it's worth, if you're in bullion, I think you're in a much better position than people who are currently in the stock market or the bond market or the crypto market. I think bullion is the safest place to be right now.
Hello and welcome. Thanks for tuning in today. The markets in general have taken a serious beating recently, and the stock market seems like it might be in panic mode after being closed for the weekend. What do you think might happen with the stock market this week? Do you think that we might see a Black Monday event tomorrow? And what could be in store for stocks in general? We did see silver get drugged down with the stocks last week. Do you think that it will keep moving with the stocks much longer like it has been recently?
Well, we're not sure. We've had two very difficult days in the stock market, and it seems as though it's going to continue if the futures are any indicator to that. And we were talking in recent months about the possibility of a recession in the United States, and that there were indicators pointing that way. And as far as I'm concerned, the declaration of tariffs by the Trump administration, I consider that to be an excuse for a market sell-off that was, in the cards already. It always happens this way. The market is as though looking for an excuse to go where it already wants to go. So we were talking about the possibility that gold and silver are going to get dragged down with the rest of the market, the same as we've seen in previous recessions, in previous panics. And unfortunately, this is exactly what's happening, at least right now. Whether it's going to continue or not, that's a good question. Right now, we're seeing plenty of volatility. I can see the market continuing to sell off. That's a possibility. I can also see the market correcting, bouncing from here for a while, for a few days. It's impossible to say. The only thing I know for sure is that I'm very happy that I'm invested in gold and silver right now. Although they're selling off, it seems to me that long term, they are the safest place to be. I'm not really concerned about them long term. I think everything we're seeing right now is just noise. I'm not panicking. I feel fine. I'm even considering buying the dip.
I feel the same as you. I was actually looking at some stuff earlier. I'm almost hoping I didn't miss the lowest entry point we might have seen down there in the mid $28 range. But I do wonder if some investors that aren't really in the metals right now might end up feeling the same way. If they went through a long weekend of stressing out and they decide they want to sell out of some of their positions, I'm hoping maybe some of those people might decide to go park some money in gold. And if they look at the silver market, who knows, maybe a couple of them will even consider silver with what's happened to the price recently.
Look,
But
I'm
I think,
afraid that when it comes to mainstream investors, their initial instinct is not to go for bullion. Their initial instinct is to go for government bonds, right? When they talk about a rush to safety, they mean bonds. But if you're buying bonds right now, you're assuming that inflation is over because inflation is very bad for the bond market, especially when it comes to long-term bonds. But, I assume that inflation is here to stay, that inflation is a long-term phenomenon, that even if we have a short bout of deflation, inflation is going to continue. So once the Fed intervenes, once the Fed cuts rates back to zero, once the Fed restarts QE, you're going to see a resurgence of inflation. And then those people who went to bonds are going to get annihilated. Yeah, they got
yes,
smacked by the stock market, and then they're going to get whacked by the bond market. And only then, after they see that inflation continues, even though we have a recession, we have both a recession and inflation, which is stagflation. Once they see that we have stagflation, maybe then they'll consider gold and silver.
Yeah, they might start paying a little more attention to it. Um, you know what's interesting is according to the Motley Fool in 2022, it was estimated 58% of US households held stocks. And of the stockholders, it's estimated the bottom 50% of US investors account for about 1% of the total stock investments, and the top 1% of investors own about 50% of the stocks. So it's a relatively small amount of people that um, would get seriously impacted. But I have a feeling that overall, it's not going to be as painful for the US in general as it might seem like right now. But it's definitely induced a lot of panic. Um,
I'm not as optimistic as you are. I think that what we're seeing right now is the initial stages of the great crisis we've been predicting all along. Again, I think that the tariffs are just an excuse, that this recession is truly induced by the fact that the Fed raised rates, was trying to battle inflation. But of course, when you try to do that, when the flow of cheap money stops, then all the bubbles tend to pop. Now, why didn't it happen immediately? Why didn't the stock market tank immediately after the Fed started raising rates? Well, there was an initial drop, but later it recovered and it set new all-time highs. How come? Well, my explanation was fiscal spending. The Biden administration, as we say, they spent like drunken sailors all throughout his presidency. And they as though compensated for the fact that the Fed was no longer easing. But now the Trump is in power and he's trying to cut spending, right? We have Doge. They're trying to cut waste and fraud.
absolutely.
But yeah, so that means that you don't have monetary stimulus from the Fed and you no longer have fiscal stimulus from the federal government. Yeah, so you don't have any stimulus, not from the Fed, not from the federal government, then everything starts to tank. Everything starts to roll over. And I think that it was in the cards. We could have seen it coming for at least a few months. The indicators were there. The market, as though, was looking for a pin in order to pop. And Trump simply supplied the pin right now.
I think you're totally right. And of course, I probably am being very optimistic about the situation. But it does seem like this is the beginning of a recession. I'm just hoping it's not going to be too deep.
Yeah,
It,
well, I can understand why people are trying to be optimistic because, frankly, if you look at the numbers, they're so grim. The only people who I think are going to do well are the stackers. The stackers, they have like this ace up their sleeve. They have their stacks. Gold and silver are supposed to do well in such an environment. And I think the stackers are the only one who are going to come out of this fine, or perhaps even wealthier than they are right now.
I think you're right, and I'm glad that you brought that up. In regards to what is happening currently, I also agree. All the indicators have been there, and of course they were talking about it for months. The Buffett indicator and Warren Buffett had moved into a cash position, and so the writing was on the wall. And this tariff situation kind of kicked the ball into motion. It was a great excuse because the stock market, a lot of people were saying it had been overvalued for a long time. They're also saying that the housing market's overvalued. They've been saying that for a long time now. Well, how could he try and prop up the housing market a little longer by cutting rates? And if he did a rate cut, they're going to blame everything they can on Trump right now. The media will.
Oh, definitely. I
Great excuse for
sympathize.
him.
I really sympathize with Trump. I think he's trying to do the right thing. I think he's trying to fix the American economy. But I think that things are so messed up and that the amount of waste and fraud and corruption we have seen over the past decade or more, it's just so great. It's beyond what can be fixed. Certainly by one man or one administration, it's just too much. And we need to pay the piper. It's time for all this malinvestment to unravel. We need to see some pain, some true pain. And only through the pain and the bankruptcies can you start fixing the economy truly, because a recession is the period of time in which you fix all prior mistakes. You have to go through a recession in order to get to a better place.
Yeah, you're going to have to deal with that correction, rip off the band-aid, so to speak, and just deal with it. Because there's a wound festering under there that's going to get really bad if you don't endure the short-term pain to try and deal with it. In regards to the tariff situation, what has caused a lot of panic recently in the markets. Now, a few of these tariffs have already started, and additional tariffs are going to kick in this week. Um, what do you think the impact of the tariffs is going to end up being? And do you think the market's going to kind of wake up and at some point and go, oh, these tariffs aren't affecting the metals, and the metals will kind of decouple from the rest of this activity? What do you think about the tariff situation?
Well, tariffs in general are meant in order to make imports artificially more expensive so that your local products seem cheap, relatively speaking. And this is supposed to encourage your local production. And this way, revitalize the industrial base, which is a good thing. Like, this is a very positive approach, in my view. I think the US should reconstruct its industrial base. The thing is that that involves short term pain because the factories are not built yet.
Right. The jobs
Yeah,
aren't here right at this
yeah,
moment.
the products don't yet exist. They will exist. They will be created. Everything will be created once it becomes economically viable to produce again in the United States. But that means that right now you have to pay more for everything. So immediately you get a boost to inflation. And everybody's thinking about the one-time boost. They forget that there are second order effects because if prices rise, then people can't afford all sorts of things. They demand higher wages, then other things. Even those who were not impacted by the tariffs, still everything is going to get more expensive because you have to pay higher wages to your workers so they can afford the products which were impacted by the tariffs. So there are second order effects to everything. It's not going to stop there. Now, I've heard claims, people saying that Trump is trying to induce a recession or a panic in the stock market in order to force the Fed to cut rates so that he
Oh
can
no.
refinance the debt because there's so much of the debt needs to be refinanced in the coming year and he needs lower rates so he can refinance the debt more cheaply. And again, this is kind of an
But
optimistic thought because they're thinking that perhaps everything is planned. But how can you lower rates when you have inflation? Like, what do you expect the public to buy bonds at a negative real rate and lose money
right.
due to inflation?
No way. Yeah. That
I mean,
that's not
like,
going to work.
people are not, at least foreigners are not going to do that. They're already not very enthusiastic on, buying US bonds. So I think instead of buying bonds, people are going to buy bullion.
Hopefully so. And it makes sense. I feel like people will find it again at some point. More people will find it again at some point, is what I believe. I mean, it wasn't that long ago that it was pretty common for people to hold, 10, 15% of their wealth in gold and silver. Um, and so it wouldn't surprise me if people find their way back to it eventually. Almost like people being like, I'm going to grow my own chickens. And they're like, wait, how did people used to store their wealth a long time ago before they had to rely on the system and be at the mercy of inflation and, what the Fed might do and all these things? Um, and I do think the vast majority of people will go into bonds. I have heard of people parking their money in, yield-bearing savings accounts that they could get it out of quickly, thinking they would re-enter the market at the right point and messing that up. So everything gets really dicey in these big stock market sell-offs for the investors.
Yes,
Uh,
but I think it's going to end once people discover that inflation is here to stay. Because if people get, I don't know, 5% on their CD or I don't know, 5%
sure.
on their bond,
Money market,
and
bond.
and
Yep.
yeah, and inflation is 10%, then they're losing 5% per year,
Right?
right? And then, the excuse always when people were talking about gold, why should you hold gold? It has no yield. Well, it's better than a negative yield. Zero is better than minus 5%.
Absolutely. Yep.
So once people realize that inflation is not over, and that they're losing money in the bond market, then they're going to see the light. Then they're going to discover bullion. It's a process. It's not going to happen overnight. They need to overcome all that propaganda which they received all those years that told them that they should, stay in stocks and bonds and what bullion. That's something ancient. That's something from a different century. We're living in the future now. No, no, the laws of economics did not change. They're still here. And the laws of economics say that in times of inflation, you need to be in bullion. And people are going to discover it very gradually. It's going to be very painful at first. Eventually, they're going to come.
Oh, I think you're totally right. There are occasional boomers around who will bring up the events of, like the late 1970s or early 80s. A lot of them heard about it back then, about the blow off top and people losing money in the silver market. And it kind of stuck with them. And that was almost the generation that needed to be the flag bearers too. So it really did lose the mainstream public's attention, but I could definitely see people coming back.
Yeah. Now, speaking about gold and silver and tariffs, well, we've learned that gold and silver are exempt from the tariffs. And as a matter of fact, this was the excuse for the sell-off in gold and silver. Because, as you may recall, in recent months, we've had this premium of futures compared to the spot price of gold and silver. And that meant that there was this rush to import bullion into the United States. And, the mainstream narrative was that this was due to the fear of tariffs. And now that bullion is exempt,
Yep.
the premium has collapsed, and there is as though there isn't a reason to go on importing that bullion, and there's no need for the price of gold and silver to rise, so their price dropped. And I happen to think that this is just a narrative. This is not the true reason that gold and silver was moving to the US. I think that the true reason is inflation and the fear that the gold and silver which people held, for instance, in London, didn't exist. And certain people wanted to make sure that they truly do have that bullion. And that's why they imported it so they can hold it physically. And why do I say that? What's the indication to that? Is the fact that we've seen such a record amount of people standing for delivery, for physical delivery at the COMEX. And they didn't just buy it and continue to store it at the COMEX vaults. No, it exited the COMEX
Yeah.
vaults. It
Entered and
left
left.
the vaults. So it wasn't just about the location of the bullion. It was about holding it physically. It was about knowing that you actually have it, you own it.
Right. Absolutely. And you have cut out that counterparty risk of the other country. Do they still have it? Do they not have it? And it's interesting too because recently Germany asked for gold back that's being held in the United States. So a lot of countries are starting to feel this way and are interested in getting their gold back in their hands.
Yeah, so
And
I want people to, don't believe the propaganda. Don't believe what you read on mainstream news because there's just spin attached to everything.
absolutely.
Look at the big picture. Look at the long term. We have inflation. That's the reason, the true reason to hold bullion, and that reason is not going away. It's going to stay. And even if we do get some short-term volatility in the prices of the metals, it was to be expected. We weren't sure if it's going to happen or not, but here we are, and we can see that we have that volatility in the price of gold and silver. Who cares? If you're holding physical gold and silver, and you have no intention of selling it anytime soon, it doesn't affect you. You can endure this correction. Think about what we've seen in 2020. The price of gold dropped, the price of silver dropped, but by the end of that year, it recovered completely. And as a matter of fact, gold set new all-time highs. So I think we're seeing a repeat of 2020. I think there's an initial panic, but by the end of 2025, we could see all-time highs for both metals.
It wouldn't surprise me at all if you're right. I think that quite a few people might take advantage of the dips going forward, and it wouldn't surprise me if we see history repeat itself like that. The gold to silver ratio has risen recently. It's just over 100 at the time that we're recording this. How high do you think the GSR could go potentially during this meltdown?
That's kind of a painful thing.
Yeah, not the funnest thing to talk about.
No, no. Of course, we all want to see the gold to silver ratio dropping. Usually, when the metals are rallying, the ratio is falling. This indicates that silver is outperforming gold, as it should. But during 2020, we've seen the ratio spike all the way to, I think, 125. And that kind of tells us that in the situation of a market meltdown, we could go back to that ratio again or even surpass it. Right now, it has a bit of a resistance, but I can certainly see it. If the correction in the metals continues, then I can see the ratio continuing to rise, perhaps reaching 125 again. It's perfectly possible. I wouldn't take it too much to heart. It's just something transitory.
Yeah, almost expected at the beginning of this sort of economic cycle, and great buying opportunity if it does get any higher than it is right now. Um, we'll see what happens. I I'm not sure how much damage they'll be able to do to it this week, but I feel like the floor can't be that much lower um, than where they got it to today. I mean, I don't know that for sure, but
I,
if it goes to 20 cents, I'll be buying a lot when I'm dollar cost averaging because I'm not going to stop buying it because at some point it's going to break out. Um,
Look, we don't know how low silver can go because, okay, so it has horizontal support at $28, in my view. I really think it's going to be difficult to take it below 28, but it's possible. It's certainly possible. And, in an extreme scenario, I can even imagine it, going all the way down to the low 20s. It's perfectly possible. And the excuse is going to be that, oh, we have a recession. So industrial demand is falling. So we don't need silver anymore. So please sell your silver because it's going out of fashion. That was
yeah.
the excuse in 2020. They told us in the initial stages of COVID that there's a drop in industrial demand and therefore silver should fall. And it went all the way down to 12 or 11 bucks per ounce. But it happened very briefly. And at the end of the year, looking on the numbers, we discovered that there was no drop in industrial demand. Industrial demand kept up.
So that was just a narrative that they were pushing. That was a kind of a psychological operation, so to speak. So do not let them get your silver for some low price.
Some
Um,
ridiculous price. I think that the big banks are trying to offload their shorts. They need to offload their short positions if they have any understanding of what's happening. And if they have any understanding that we're facing long-term inflation, they need to get rid of that short position and preferably at a lower price. So for them, any commotion, any turmoil in the markets, it's the excuse or the opportunity to slam the prices so they can offload that short position.
yeah, I bet that you're totally right about that. I could see them. wanting to offload their short positions. And then the other side of that coin for them is they get to absorb some physical silver from the general public, stripping them of their wealth, stripping them of that potential that this investment could make them in the future. And then they'll have that physical in their possession that they could melt into 1,000 ounce bars and keep their little charade going for longer. So I think now is the time to hold on to your stack, hold on tight. It might look ugly this week. They might take advantage of the situation on Monday, especially if the stock market has a really rough day. That would be a great excuse to pound the silver price. So just hang on to it and be patient because in the future you will be happy that you have it. In my opinion, that's what I believe.
Yeah.
And of course, nothing in this video is financial advice.
Right. We're not financial advisors, but for what it's worth, if you're in bullion, I think you're in a much better position than people who are currently in the stock market or the bond market or the crypto market. I think bullion is the safest place to be right now. Thank you for listening to the Silver Hermit podcast. If you like this content, please donate in the link which appears in the description below. Please subscribe to this channel and share it with your friends and family. Hit the bell icon to be notified whenever I release a new video. Remember, I'm not a licensed financial advisor. This video is intended for general informational purposes only and should not be regarded as investment advice. Before taking any investment decision, please consult with a professional financial advisor who may assess your personal investment objectives and needs.